Start by opening the TradingView website and navigate to the Indicators section. Then search for Third Wave Indicator and add it to your chart. However, before we use this indicator, make sure to apply the settings that I demonstrated in the video. Now you can enter trades using the buy and sell signals generated by this indicator. But hold on, it's advisable to always incorporate two filters in any strategy. This way, we can identify range market conditions and signals that go against the trend, allowing us to avoid potential losses in such market scenarios. Therefore, in the next step, we'll utilize the EMA difference histogram and stochastic indicator. However, before employing this oscillator as filter, make sure to apply adjustments demonstrated in the video to its settings. Now the green histogram will confirm buy signals and the red histogram will confirm sell signals. Now if you observe the red histogram and the sell signal, it is confirmed that the signal is valid. And now, in the final step, we will add the SMA or Simple Moving Average Indicator to the strategy. After adding the indicator to the chart, proceed to its settings and apply the necessary adjustments as demonstrated in the video. With this addition, you can easily filter out the counter-trend signals. To achieve this, when the candlesticks are below the SMA, you filter out the buy signals. Conversely, when the candlesticks are above the SMA, you filter out the sell signals. Now, let's establish the entry rules. To enter a buy trade, you should first wait for a bullish signal. Next, the price should be above the SMA indicator. In the final phase, the histogram should be green and above 0. So, if all these conditions are met, you can open a long position. After entering the position, set your stop loss just below the recent swing low. For taking profit and exiting the trade, you can use a risk-reward ratio of 1 to 1.5. This will help you manage your trades more effectively and potentially increase your profitability. And now to initiate a sell trade, start by waiting for a bearish signal to appear. Subsequently, ensure that the price is trading below the SMA indicator. In the final step of confirmation, the histogram associated with the signal should be red and positioned below 0. So, if all these conditions align, you're then ready to open a short position in the market. And once the position is established, place your stop loss just above the recent swing high. For determining your take profit and exiting trade, consider employing a risk-reward ratio of 1 to 1.5. At the end, if you are unsure about transforming each trade into a profitable one, then it's crucial for you to watch this video.